Hey everyone, welcome to our deep dive. We're
Yeah.
diving into the world of Indian tech stocks today.
It's a fast-moving world.
It really is, and we're trying to keep up, right?
Right.
So specifically, we're looking at the ICICI Prudential Technology Fund. Is it going to launch your portfolio into the stratosphere, or should you just sit this one out?
Well, to help us figure that out, we're looking at a new report from SOS Finwell.
Love those guys. You know, they're all about making financial wellness accessible, easy to understand.
Exactly. This report really breaks down this fund into bite-sized pieces. So what's the deal with this ICICI Prudential Technology Fund? What is it all about?
Yeah, like what is it?
Okay, so it's what's called an open-ended equity scheme.
Catchy. What's that mean in plain English?
Basically, you can buy or sell units anytime you want.
Okay.
It's not like you're locked in. The main objective, long-term capital appreciation.
So you're saying it's more of a long game, not a get-rich-quick scheme.
Exactly. It's about investing in, you guessed it, tech companies and hoping their value grows over time.
Which, let's face it, Indian tech is kind of a big deal these days.
It's huge.
So you could be along for that ride, right?
Yeah.
Speaking of rides, the report mentions a 25% annualized return over the past 5 years. That's a wild ride.
That is, but
Yep.
past performance, as they say, it's not a guarantee, right?
Got
It's
it.
like just because your friend won at Monopoly last week doesn't mean they're gonna, win every time.
True, true. Although, if they keep winning, I might start questioning their strategy. Speaking of strategy, the report also mentions a standard deviation of 22.05%. In English, please.
Right. Basically, how much the returns go up and down.
Volatility. Got it.
Huh.
Higher the number, wilder the ride.
Pretty much. More potential for big gains, but also bigger dips.
So buckle up.
Exactly.
Okay, they also mentioned the Sharpe ratio, 1.12.
Right. So that one tells you how much return you're getting for the risk you're taking.
Got it. Higher is better.
Generally, yeah. More bang for your buck.
Okay. Now, who's actually steering this ship?
Right. The fund manager's name is Vaibhav Dusad. He's got a ton of experience, like over a decade in finance.
Okay, so he's not new to this rodeo. That's always good to know, right? Someone who's seen the ups and downs.
Absolutely. Experience matters in a volatile market.
So someone who knows how to navigate choppy waters. Speaking of, what about those fees?
Yeah.
You know, the ones they always hit you with.
Right, the expense ratio. For this one, it's 2.53% for the regular plan.
Okay. And what about if I go direct?
Direct is cheaper. Yeah, 1.67%.
Okay, so lower is better, obviously, but why?
Because that's money that's not growing your investment, right? It's going towards admin, management, all that.
Got it. So more money for the tech party, less for the party planners.
Exactly.
All right, so let's talk about this guest list then for this tech party. Who are the big players in this fund? Who are they actually investing in?
Okay, so we're looking at companies like Infosys, HCL Technologies.
Okay. Familiar names.
Yeah, Tech Mahindra, Persistent Systems.
All right, so big players. But why should I even care? Why does it matter?
Because, it's your money.
True.
It's good to know what they're invested in because it tells you about their strategy. Are they going for those big established companies or are they taking risks on smaller, newer companies?
Right, so it's like,
Yeah.
am I at a party with like the industry veterans or the up-and-coming startups?
Exactly. And it's up to you what kind of party you want to be at, right?
Right. Okay, now what if I commit to this party, this fund, and then I suddenly need to, I don't know, make a quick exit?
Right.
Like, are there penalties?
Yeah, there is what they call an exit load. If you sell your units within 15 days, you got to pay 1%.
Oh, okay. So it's like a little nudge to think long term.
Exactly. Think of it like a gym membership,
Sure.
You sign up for the year, you're more likely to stick with it.
All right, fine, I'm committed. But what about the tax man? Nobody likes talking about taxes, but we got it right.
We do. So this being an equity fund, you're looking at capital gains tax on any profits.
Okay, and just remind me, what's the difference between long term and short term?
So short term is if you sell within a year. Long term, you hold it for more than a year.
Okay,
And generally, long-term capital gains tax is going to be a lower rate.
gotcha. So the longer you stay at the party, the better the tax situation.
Doesn't like that yet.
Okay. Now, I did notice this fund is managing a ton of money. Like the report mentions 8,564 crores.
That's a lot of crores.
That's a lot of crores. So what does that tell us? Is that a good thing, bad thing?
I mean, it means it's a popular fund, right? Like a lot of people are invested. Doesn't necessarily mean it's the best, but,
It's like that restaurant that's always packed.
Mm.
Doesn't necessarily mean the food's amazing, but people are going for a reason.
Exactly. There's a buzz.
Okay. So Bottom line, is this fund right for me? Should I be calling my financial advisor right now?
Well, that depends. Do you like Indian food?
Who doesn't?
Okay, well, this is like the spacey vindaloo of Indian tech funds.
Okay, so you're saying it's not for the faint of heart?
Right, you got to be able to handle the heat, you get comfortable with a little risk, excited about the growth potential of Indian tech, got a long-term outlook, then yeah, this could be a good fit.
Right.
But if you're risk averse or you're looking for a quick return, this is probably not the one.
Okay, so it's all about knowing your spice tolerance,
Yeah.
or in this case, your risk tolerance.
Exactly. Some people, they like it mild. Some people, they want that vindaloo.
I'm more of a Vindaloo guy myself.
Yeah.
But speaking of options, the report did mention some other funds, right?
Yeah.
Like if this one's not your flavor,
Right.
like what else is out there? What are we looking at?
So if you like the tech theme, but you want to, maybe try a different flavor, there's the Aditya Sun Life Digital India Fund
Okay.
and also the Tatna Digital India Fund.
Okay, so a couple other options, but how do I even compare them? What should I be looking at?
Well, each fund is going to have its own strategy. Some might be more focused on, like I said, bigger companies. Some might be more into those startups. They'll have different risk levels.
Got it. Got it. So it's about figuring out their style,
Exactly.
their investment personality
Yeah.
almost. Okay. But let's go back to the ICICI Prudential one for a sec. Why does SOS Fin think this one's worth considering?
Well, one thing they highlight is the focus on Indian tech specifically.
Yeah.
A lot of funds, they're invested all over the world.
Right.
This one's really, doubling down on India's growth.
So you're really hitching your wagon to India's tech scene.
Exactly. And there's a lot of excitement about that right now, right?
Oh, there is. There is. It's kind of hard not to get swept up in all the, the innovation, the energy.
Absolutely.
Okay. Any final words of wisdom from SOS Fin? Well, before we wrap this up.
Well, they do emphasize that like any investment, there's risk.
Right, of course. This isn't a sure thing.
Exactly. But they believe that if you're comfortable with a little bit of risk, you've got that long-term view.
Got that spice tolerance.
Exactly. You could see some pretty impressive returns.
Okay, so it's about knowing yourself, knowing what you're comfortable with, and if this particular fund isn't the right fit, hey, that's okay. There are other fish in the sea, right?
Lots of other funds out there.
Exactly. And that's where SOS Finwell can really, come in handy, right? They can help you figure out which one is right for you.
Exactly. They can give you personalized advice, help you build a plan.
Just like having a personal shopper, but for your finances.
There you go.
I like it. Well, on that note, I think we've covered a lot of ground today. We've explored the exciting and sometimes spicy world of Indian tech stocks.
We have.
Remember, folks, knowledge is power. The more you know about your investments, the better decisions you can make. And as always, mutual fund investments are subject to market risks, so please read all scheme-related documents carefully. And don't hesitate to reach out to SOS Finwell for personalized advice. They're there to help you navigate the exciting world of investing and hopefully achieve your financial goals. Until next time, happy investing, everyone.
Happy investing.